We are in the investment business, okay? That means there is risk. There is nothing guaranteed about it. There are risks no matter what position you are in. And today we're going to talk about different aspects. You may fall into the role of a seller. You may fall into the role of a buyer. You might be a lender. You might be a borrower. Every single one of those roles has risks. And then also, if I can fit it in, I will talk about how to protect each other when you are a lender and you are lending to a borrower. How does that borrower protect you? So, a seller, what kind of risk does a seller have? What kind of risk does a borrower have? What kind of risk does a lender have? What kind of risk does a buyer have? Everyone has different risks depending on what role that they're in. The process of identifying those risks are still the same. Now, each role will have different risks associated with it. And this risk management process, if you've been in corporate America for any length of time, you've probably seen this graphic or something similar to it. So, 4 roles that we're going to talk about today: seller, buyer, lender, borrower. There's many more as well, but let's focus on these 4 primarily. Anyone want to mention any other roles that possibly I can speak of while we're at it? Okay. So what do sellers fear? Okay. How many of you sold a property? And what concerns did you have in selling those properties? Right? You're talking to a potential buyer. Does that buyer basically have any conditions? Well, yes, it's all subject to my getting financing. Oh, it's subject to my getting my other home sold so I can buy this one. It's subject to a lot of different things. There's a lot of concerns you have as a seller. And when you accept an offer, how do you make that decision on which one to accept? Okay, one may be the cash offer price that you want, but there's conditions with it. Another one might be financing, but there are no conditions with it. How do you balance out that judgment? How do you balance out what works for you? Okay. And once you sell it, what is it that buyers will oftentimes do? Oh, I was going through the basement and I saw this pipe was rusting away and it's leaking, and I think this should be covered by you because you should have disclosed it. Okay. Did you have a due diligence period? Did you do anything during that due diligence period? Did you have a home inspector come in? What does their report show? Okay. If you basically bought this as is, do you not understand what as is means? Right? As is means the way it is. We are not going to warrant anything. We're not going to guarantee anything. We're not going to fix anything. You're buying it as is. Okay, so sellers have this kind of concern. And buyers still don't figure it out. Well, I'm going to have my attorney talk to you, and you better have an attorney because we think you are really responsible for this. This is the kind of stuff sellers go through. How do the sellers protect themselves? In your documentation, make it clear cut. if you have different things, if you have different ways to go ahead and try, evaluate which offer is better for you versus another. In this particular case, we talked about earnest money. Who's willing to go ahead and put money up, and is this going to be refundable or non-refundable? And of what substance is this earnest money going to look like? So all of you who are agents, you basically have seen things like this. Oh, I'd like to see proof of funds. Okay, how many of you buyers have gone out to go ahead and go to these online companies and get yourself proof of funds, or you work with other people to get proof of fund letters? Okay, so in reality, what does proof of funds really mean? Okay, yeah. So why do you have things like escrow instructions? So I'm a lender, so I will routinely have lenders' closing instructions. Do not disperse funds until the following conditions have been met. Okay? Things like, yeah, you have proof insurance from day one, from that moment of closing. I, as a lender, am insured on this piece of collateral. So if I close on a Friday, I will have insurance in case it burns down over the weekend. And why do people talk about examples like that? Because it has happened. There's no insurance. Oh, I'll take care of the insurance first thing Monday morning. Guess what happens over the weekend? The place burns down or it gets damaged somehow. So are you, as the lender, insured at that point? No. Those of you who have gone through the closing process, you know how this goes through escrow. This is half of the flow chart. Okay, so you don't need to know all the details, but all you need to know is that there's pretty much a standard flow by which all these closings take place. Okay, and all the title and escrow companies pretty much do the same kind of thing. Follow the same process. Why? Because they are also regulated. Here's the other half. Okay? So, this protects the seller. We make sure that all the documents are in place. We make sure the funds we know of are coming into escrow account. That protects the lender also, by the way. Now, as a seller, do you need insurance? Generally not. But as a buyer, should you have insurance? And what kind of insurance should you have? Yeah, title insurance. Guess what? I am involved with deals where I'm not the buyer. Technically, well, maybe I could be. But there are deals that I am involved with where there is no buyer's title insurance. Okay, and I see this happen with other people as well. As a buyer, you should always have title insurance. But I'm also a lender. And guess what? Lenders also have lender's title insurance. And as a lender, you should always get that insurance. Because buyer's title insurance does not protect the lenders. What do buyers fear? Oh, this property, you know, I'm going to go ahead and fix and flip it. But I have to clear out all the hoarding and stuff like that. And how many dumpsters do I need to rent in order to get this stuff out? And what am I going to find at that point? Oh, yeah, I noticed that there were dogs and cats in that property. Guess what? You're going to find all kinds of stuff related to the dogs and cats too. Yeah. So is flooring potentially going to be an issue? Yeah, most likely. Okay, are you going to have issues with the walls, the plumbing, lighting, other things like that, yeah, you will probably have other things as well. What was that, Jim? AC, roof, yeah. I mean, some things you can check out, other things you can't until you get all the trash out, right? Who's cleaned out a hoarder house, right? I know some of you guys have done that, yeah. Anyone want to kind of go through and tell your story of the hoarder house? I know Rich just posted one not too long ago in the pictures that he has, okay? You got one? You got it?
So years ago, I bought a house on Park Avenue on the east side of Riverside, on right up against the freeway, pretty much. I bought it from someone I met at the club. I paid $255,000 for it. It was 1.17 acres. It was a farmhouse. He told me it was a real mess. And it was like late in the day. I went over and I walked the property, and it was a puppy mill. Okay, does everybody know what I'm talking about? Like where they grew Pomeranians, and they grew like all these little animals, and it was a hellhole. It was a horrible place. And so we walked all around it, and we actually saw a bunch of Pomeranians jumping around. And I told him that I would buy the property, but all the animals had to be, taken care of. So they got rid of the animals, and there was so much trash and so much, there was literally, it was over an acre, so there was stuff all over the property. It was a real horrific thing, and I'm sorry, I don't remember the number, but it was thousands of dollars. But on top of that, it was because the animals were there. There were rats throughout the entire house. And I learned everything about rat oil, or how to kill rats, or, like all the specificities of this, of rat eradication. But like we had to tear all this drywall off the property, and put Red Guard on the studs to block the smell. It was so bad. Okay. Yeah, I mean, anyway, long cleanouts like this, every property, that's actually how you make money. We call that the smell of money. Exactly, is that rotting garbage. Or how about, have you ever opened a refrigerator and that's been dead for like maybe 3 or 4 months, and it's like 100 degrees and yeah.
Right. Okay. And then the newbie investor will think, oh, I can clean out that refrigerator, right? And then they scrub, they take it outside. No matter what, that smell will not go away. It's easier to go ahead and junk it and get another one. All right. There are houses, yeah, in different kind of situations. You just won't believe the conditions that they're in. Okay. Buyers are always afraid of what it is that they can't see, because they have to clear everything out. And then as they start going through the walls and other things like that, guess what? You find even more stuff. Okay? So that kind of thing we're kind of used to. All right? But there's still going to be surprises. Okay? What about the stuff that isn't so obvious? What about the paperwork surprises? Turns out there's going to be title issues. And guess what? The stuff that I'm involved with, there are also title issues. I'll describe a little bit of what I have seen in the past year. So properties were purchased by a California investment group. And later on, they couldn't make a go of it, and those properties were foreclosed on, taken away, and then resold to, coincidentally, another California investor group. And the first California investor group thought the second group was in cahoots with the people who originally owned the property and were the lenders and things like that. So they're suing the second California investor group. Okay. This is also the same people who did not have buyer's title insurance. Okay? So now we're looking at, well, guess what, lenders? Okay, did you know that there was another lender ahead of you who is now foreclosing on the property that you think you are secured on? Do you think you maybe are at risk on your deal as lenders? Yeah. So apparently the second group of lenders, okay, who are institutional lenders, did not do their due diligence and find out there were title issues and get those title issues cleared, or basically walk away, say, I won't do this deal. So having to deal with stuff like that. Overpaying, of course, that's always been a great fear, okay, especially in a choppy economy. Who's seeing choppy economy at this point? You have prices that seem to be kind of holding and then will kind of drop. So is your deal going to be contingent upon the market at that point, or are you looking long term, right? We often talk about, okay, well, if you're going to hold this property for a long period of time, does it really matter what price you pay? Short term, it does. Okay, so if you're looking at this as a short-term investment, then yeah, you have to be concerned about what price you pay. But if this is going to be a long-term hold, I mean, we're really talking about long-term, then at that point, it doesn't. What if the seller backs out? Okay, what concerns do you have as a buyer? What recourse do you have? You thought you got this smoking deal, and then the seller says, nah, I sold it to somebody else, right? That's never happened to anyone in this room before, right? Yeah, sure. Yeah. So how are you protected? Yeah, you could have paperwork, okay? Anyone ever do a memorandum to try and make sure that you're clouding the title? What's the issue with stuff like that, right? That doesn't really work the way that you think it's going to work either, okay? And in fact, you could be sued. Yes. Yes. Tortious interference. You don't want to know that. You don't want to be in a situation where someone is saying that to you. Okay, and unfortunately in many parts of the country who people get taught to go ahead and record a memorandum, that's what they're hearing. Okay, so in tortious interference.
Like when that would happen to somebody,
So,
for example.
you as a, let's say, as a wholesaler, okay, you strike a deal and you want to make sure that you are protected in that deal. So you are going to record a memorandum of understanding. So really, this is recording just like you would a deed of trust. You go to the county recorder, you're going to record this memorandum that we have agreed to go ahead and conduct this purchase/sale. Okay, and so in theory, if a title company is going through and checking the chain of title, they will see this memorandum stop there in case somebody else is trying to buy that property. And they will say, this memorandum basically is holding up a sale to someone else. Okay, in theory, that's the way it's supposed to work. Okay, so